A Canadian recession is coming, and the warning signs are impossible to ignore. Housing prices are out of control, and mortgage rates are unpredictable. And the government is burning through cash at a staggering rate, spending 61% of the entire economy just to keep things running. Now there is a new threat, massive US tariffs that could cripple Canada's biggest industries, pushing their economy into the brink. Here's the kicker. While this could be a disaster for Canadian homeowners, intelligent investors are already making their move. This is the exact same thing we did in 2008. People are shifting their money into US real estate and locking in much better tax incentives, lower prices, and long-term financial stability. In this video, we're going to break down exactly what is happening, how bad it can get, and most importantly, how you can capitalize on this before it's too late.
So Ken, you were raising money in Canada in 2008 during the global financial crisis. And how were you doing that, and how could that be related to what's going on today?
Well, I think the big thing is it's going to be based on the currency and inflation. Like if you're wealthy in another country, you're going to want to diversify your assets into places where you think it's going to grow and be strong. And certainly the U.S. certainly looks good in that regard. So if you always want to be in hard assets wherever they are. And so in 2008, that's exactly what we did. We did that with Marcin, and we started buying properties in Texas, and we bought a lot of them. They cash flowed, same exact model we have today.
Yeah, same model, same process. And, one of the things that I think makes a really big difference for people that are looking to raise capital or grow is ultimately the investor isn't buying the deal first or buying the team. They're buying the management process. I call it your unfair advantage. And again, with Ken and Ross, Ken's unfair advantage with the property management side and Ross's advantage with the construction, the development, and combining those two things plus the track record. Ultimately, like when we worked together, it was people were already putting their hands up before there was a deal because they had bought into your methodology, your team, your process, and that's really the big difference.
But wasn't it partially too that there's such a currency difference back then too?
Well, so look, the currency helped, but it's so obvious today. But I can tell you back in 07, 08, when I was making those phone calls, we didn't know if the United States currency was going to keep falling. So it was literally the other extreme of the pendulum, because you remember in 07, 08, this was ground zero for a lot of issues, right? A lot of bankruptcies, a lot of issues. So Canadians were looking at the South and thinking, hey, man, like, how do I know the dollar isn't going to go even lower? So that was the thing we were working against at that time. Today, the shoe's on the other foot. And it's like, well, how do we know our dollar isn't going to go lower?
Right.
And that's actually the point. The one thing that is consistent is having somebody like Ken and Ross and a team that actually knows how to navigate that environment.
That's a good point. So in 08, I remember, imagine what it was like in 08 in the U.S., not in Canada, but in the U.S. In the U.S., people were losing their homes. There were millions of homes that were going back to the banks, and things were an absolute mess here. And we were in Canada trying to pitch real estate.
Hey, come invest down here. It's great.
Right. And people are like, why would we invest there? It's a bloodbath.
We would come down here and we would do site visits. And I remember I was at the mall in Scottsdale and I walk out and looking for a cab, and a limo driver runs up to me and goes, hey, do you guys want to drive? I'm like, I don't need a limo. I just need a taxi. He goes, no, same price. Like you could tell they were looking for work. It was dire. It was that bad. Whereas Canadians were coming down, and back home, it's all la, 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 la. And down here it was still a process.
Yeah, and so what could be going on is that could be flipping. That script could be flipping right now.
Well, and I said earlier on our live, I was saying, during COVID, every government was printing money. So it was like we were moving in tandem. But, if you guys start to print and we're not, then all of a sudden our economies can be in totally different positions.
So what? You make a really good point. And I think a good leading indicator, and again, I'm not an economist, but if you look at what our version of the Fed is doing, the Bank of Canada, we've already lowered rates multiple times this year, whereas you guys have stood firm in the 4s, right? So we just lowered them now with the anticipation of what's happening with the Trump tariffs, right? So everything you're saying is lining up in that direction.
So tariffs have been enacted on Canadian exports at 25%. How will that impact Canada's economy?
Not very well. Not very well. It's look, the economy in Canada is very dependent on the United States, and that's not your problem. That's our problem, and I think that's part of the issue that Canada has had it for so good for so long with the United States, and I think we all kind of just got comfortable with the relationship. And whether you agree with how Trump's doing it or you don't is kind of regardless. It's the reality of the situation. And I think this is just going to create an environment where Canada has to figure out how to find more customers, how to diversify. You've got thousands of clients, tenants, and you don't have one tenant that represents a third of your units. You diversify.
Right.
So it looks like Mexico and Canada's tariffs, though, are,
On a 30-day pause.
Yeah.
Right. So, but the reality is he's talking about these tariffs, during his campaign. He made no bones about it. Also China, which nobody's really talking about today. So what do you think he's going to put on, what demands do you think he's going to put on Canada, because he said, okay, I'll give you a 30-day pause.
Well, so it's an interesting point, and I'm just going to share one thing just for context. I find it very interesting that Canada got hit with 25% and Mexico got hit with 25% and China only got hit with 10%.
That's what I thought.
I just want to point that out there. I don't know if anybody has any opinions on that, but that is a very intriguing question to me.
It's a heck of a question.
It's almost like he doesn't want to rock the China boat too much. He's rocking the Canada and Mexico boat a little more.
Okay, so part two to that is if he's using the rationale of, by the way, Trump's a fantastic negotiator, art of the deal, all that stuff. I mean, he is who he is for a reason. But if he is, in fact, worried about the drug epidemic, which is a big epidemic both in Canada and U.S. and other parts of the world, then I just want to ask the question, where does the fentanyl actually come from?
Right.
Right. Where does it come from? Because, Canada may be part of the issue, no different than anywhere else. But where does it actually come from? I think we all know. The other question is, if the issue is border security, I don't know about you guys, but I don't see too many Canadians trying to sneak into the United States illegally from the border on our side. So that's the other thing that.
So there's a little bit of pushback to this. I'm just going to, from what I understand, is I guess his issue with that is that you guys let anyone into your colleges without properly vetting them, and then they could technically come over here. That's what I was told at dinner last weekend. So
that's interesting. I mean, I haven't been in college for quite a while, so I don't know what the requirements are. But look, the immigration on our side as a whole has been a burden on the economy for sure. And as far as what percentage of those people are going into the U.S., at the border as a percentage, what's been detained, I don't think it's less than, a percentage of what's happening on the southern border. So I think for context, I don't know, it'll be interesting to see what ends up happening after this 30 days. Trump may very well be using this as a way to just reestablish a new framework for a conversation. But look, the thing that a lot of Americans need to know is that we export more than maple syrup and hockey players, right? Coming down to the U.S., there's a lot of other things that we supply the U.S. And I was hoping that, we can maybe talk about some of that stuff, because I think a lot of people don't really know how much stuff comes down here from Canada. And I think that's important.
Well, I didn't. I'll tell you that. I started looking into this. You guys are our biggest importer. We get crude oil from you, but number one in the world. That's 61% of all our crude oil comes from you.
Yeah, there's so much oil and gas that comes down here. Plus, most of the refineries in the Midwest and on the Eastern Seaboard, they're only set up to deal with the Alberta crude, right? So the stuff that comes down from Canada, all those jobs, all the refineries, all the upgraders, there's millions of jobs that are dependent on having that type of oil coming in.
Yeah.
And it's a big deal.
But for real estate, I already knew that we got a lot of our lumber from their Canadian mills, house, for homes and multifamily. And of course, so it's going to be interesting, these tariffs, see how far they go.
Well, you know what it is? It's actually, I actually think it's a good thing that this is happening in some ways. I always try to look at the benefit and everything. And, Trump and a lot of people in Canada, they're just like down here in the U.S. You either love him or, you have opinions, right?
Yeah.
But I think what this has done is it's really exposed from a business perspective that we only have one big customer in the world as a Canadian. Mm-hmm. And it's important that we learn how to get along with each other in Canada, because y'all got states, we got provinces. Our provinces really don't do business with each other. They only deal business with the U.S.
Oh, interesting.
So unlike here, it's like states are, you do business, whatever it is. In Canada, everyone's biggest client is the US. So I think what this will do, if nothing else, is it'll just force Canada to learn how to do business with itself.
Well, and that's kind of what this is happening, right? We're going from this global economy into a more local economy. And COVID taught us that too, because when things got shut down, we didn't have access to certain things that we needed.
Yeah. And you know what? I've always, I've been doing business down here since 2008. I always appreciated the way things are down here and just the permitting process, the tax advantages, 1031 exchange, bonus depreciation, all these things that you have down here. I think one of the things that Canada needs to do better is actually take a page from your book in terms of creating an incentive to reinvest. Because in Canada, when you sell a real estate asset or a business asset, there are very limited ways to be able to mitigate your tax between transactions. We don't have 1031.
So there's just no point in...
Well, everybody's holding. Yeah. Well, what you do is you buy a little house and it goes up from 50 grand to 500,000 and you just hold on to it, because if you sell it after you've refinanced it, if there's no way to recapture that benefit, why would you ever sell it?
Yeah. In fact, you guys, the other thing I found was interesting from having been up there a lot is you don't have those 30-year mortgages, right?
No, we have commitment issues in Canada. So
I know it's interesting though, and people need to think about that. Like, they don't realize how big that is in the U.S.
Yeah. So the 30-year mortgage in Canada, when we talk about terms, we have typically 5-year terms for mortgages. You could get a 10-year, but that's like the max. And that's so to be able to buy a house here and have the same rate for 30 years, that does not exist.
So it's interesting because when I was doing a little bit of research on Canada and their mortgages, and I could type in that you can get a 25-year mortgage in Canada.
Yep.
And kind of Google tells you that. But then when you look closer into it, you can get a 25-year mortgage, but the rate resets every 5 years on it.
Yeah. It's a 25-year amortization, but not 25-year term, 100%.
Yeah. So that makes it confusing because when you initially, like if anyone listening Googles that, they'll be like, oh no, Canada has a 25-year mortgage. It's like, no, I mean, they give you the mortgage, but they reset the interest rate, which makes it so much harder. We're so blessed in the U.S., we don't even realize it, that we have this set rate through inflation. People take it for granted, right? They take for granted that we have this privilege of having a 30-year set rate because that means our payment doesn't change no matter what the economy is doing and what inflation's doing.
Yeah. Those are two big reasons why we are attracting investment from Canada.
Oh, 100%. I mean, I've been in this business of sourced multiple 9 figures in private capital and private equity. And a lot of the deals that I've done, my clients have done, is U.S.-based real estate. And I mean, as you know, when we worked together back in 09, 10, it probably forever will be the no-brainer investment for a lot of people because you have massive tax incentives, you have the capitalization, the mortgages, the ability to access deep pools of capital, and you have your cost structure is just so much more affordable. I mean, I know you guys, maybe not you guys, but people in America think your houses are expensive. Come with me. Come with me to Canada, where $400,000 gets you a tent and a parking spot, right? There's markets where you can't even get a condo for that much.
I know. We actually did a whole show on this where I think the average was 700,000 or 800,000 or something for the country, and certainly the coasts are a lot more, right?
Oh, yeah.
Like in the millions, Vancouver, Toronto. And we were looking into this. I wanted to get your feel. It seemed to me that when you guys started your aggressive immigration policies, it took a piece of the housing away from its current citizens. And because, by the way, as you know, I grew up on the border.
Yeah.
So I grew up north of Seattle, and it this is a long time ago, back in the 80s, let's say, and it wasn't that much different, but it's really gone up a lot as you guys have had a lot of people can basically invest in Canada, move there, right?
Well, we had a lot of people, and again, as you can appreciate, there's two groups of people that will have an opinion on this. The people that are investing in real estate think that anything to drive the price up is a good thing. But the problem is it drives a lot of the local people out of the market. So in Vancouver, they literally, and I think they did this across the country now, where they introduced where you have an empty home as an investor, you actually have to pay a tax on that to be empty. So the incentive is to at least put it into the rental pool. And then the other thing they've done is for 2 years, they've made it, they've prohibited foreign investors from buying residential homes because it's gotten so bad that, again, Vancouver, Toronto, other major markets, it's literally to a point where, well, you think about it, downtown Toronto, if somebody's making $50,000 a year, that sounds like, okay, that's a good salary. Well, first of all, our taxes are generally higher than what people pay down here in the US. Like your percentage of taxes is, mid 40s to low 50s, depending on what bracket you're in. And then you factor in if rent for a 2-bed, 2-bath condo downtown Toronto is $3,000. You literally have to take the Canadian, my fellow Canadians will know this, you have to take the GO train from an hour outside the city to have a job downtown just to spend the other 3 hours of your day commuting back and forth. So it's the entire system downtown in major markets, it's upside down.
So just to be clear, because I remember back in the day, they used to be able to invest in Canada and then you could buy real estate. And now they just, they passed a law that said you can't.
Foreign investors, yeah. The residential side, there's literally, it's a 2-year freeze. I don't know how far along we are in it, and a big part of it is because the immigration became such a big, look, I'm all for having people legally come in.
Yeah.
But we expanded that, let's just say criteria to millions of people per year. And Canada now is 41 million people. So when you bring in a couple million people into 40 million, that's a lot of human beings. So the buses are stretched, our healthcare is stretched, the highways are congested.
Do you see, because is Canada more of a socialist kind of government than the U.S. or?
So let me answer your question this way, okay? If you look at, and this is a very interesting question, if you look at the percentage of GDP in Canada as a percentage of total GDP, I did the math on this. I think our total GDP is about $2 trillion a year, and about 61% of that is government-initiated spending.
Oh, wow.
So let's just leave that there for a second. Now, for contrast, the United States, I forget the exact how many tens of trillions of dollars the economy is, but only as a percentage of GDP, government spending is about 20 to 30%. And that's in its current post-Biden era format. So we'll see what happens with Elon and Doge and where that goes after. But just on a surface, we spend our economics come from 2/3 more government than you guys have down here.
Say these tariffs, which are now enacted in Canada, 25%. And if that puts you guys into a recession, your government is going to respond by printing more money, most likely.
You make a really good point. And I think, again, the better way to look at this from my perspective is I always try to look for the silver lining in everything. And, Canada responded with the retaliatory tariffs, and we'll see where that goes. And it's a lose-lose situation, right? In a land where it's eye for an eye, everyone goes blind, right? And ultimately, I think there's going to be problems there. The recession for Canada, I think on a lot of ways, we did it to ourselves because we've been relying on the United States as the number one client forever. Like 2021, 2022, 2023, we had Japan, we had Korea, we had Germany, we had Poland, we had all these dignitaries coming over to Canada and trying to convince us to sell them their LNG, their natural gas. And our prime minister at the time was saying there's no business case for it. Well, billions, and then Qatar made deals with France. They made all these multi-billion-dollar 10, 20-year deals. Those could have been our deals. So I think we've shot ourselves in the foot. And unfortunately, this is going to be a painful lesson for hopefully not long, but
we raised a lot of money through Canada. And it's very interesting because a lot of people, when they think of, let's say, U.S. real estate, if you're in the U.S., you don't think of foreign investment that much. It's just not top of mind. Well, as you know, we went up there in the 07, 08, 09 range. We raised, $200-300 million. And we started investing in Texas real estate. Can you walk through, because I think what's interesting now is as these tariffs start to roll out, Mexico, let's say, if that happens, Canada, if that happens, the dollar the peso, the loonie. We got the loon. We got to look at all of these things together. They're all interconnected, and I don't think Americans really look at that. But one of the reasons that worked so well is because our dollar was not that strong, and your dollar was very strong, and so there was another reason that the Canadians were looking at the U.S. real estate at that time, right?
Well, and you make a really good point. And I think the point for international dollars to come into the United States now, whether it's Canada or abroad elsewhere, is because the U.S. dollar is going to continue to be the strongest dollar in the world, the foreseeable future. So, and I heard, Danille, you talking about on one of the previous podcasts where people are coming over from, Brazil or other parts. You had the milkshake theory concept and all this. And I see so much money coming into the U.S. So today, the case for albeit Canadians coming in as investors in American assets is, number one, the business case is sound, the developments, the projects you guys have going on, it all pencils and it makes sense. But aside from that, I don't think, if you look at the likelihood of the Canadian dollar going up or down, I actually think that people getting out of Canadian dollars with some of their assets into US dollars is a sound way to look at hedging your risk, because we could be in a scenario, depending on where things go, that our dollar drops even lower, in which case this is a great way to mitigate your purchasing power. Correct. As a Canadian investor.
That's right.
Yeah, and I people wonder that, because right now the U.S. real estate market on the multifamily side, you're finding some really good deals right now because you have some syndicators in trouble. Single family, a lot of people are locked into those low rates, but we are seeing inventory starting to pile up and things aren't really moving. So people are always wondering, what's the real estate market going to do? What's the real estate market going to do? And I see this, if the peso and the Canadian currency starts to lose its value, and just all over the world, right? I see people wanting to invest in real estate here just to hold, not even if it cash flows, it's just to hold value.
What's interesting is that, Trump aside and whoever's in charge of Canada aside, it's policies, not people, that really matters long-term in terms of guiding people's decisions on the investment side, I think. And why I say that is because if we all understand this era of prosperity that Trump's trying to usher in, whatever version of that you believe to be true, is it going to happen? Well, yeah, everything is lined up. I saw Elon made a tweet about how they're wasting money on, you're finding all these inefficiencies and the Doge, they found overspending on all these different components. I mean, when they cut all that fat, combined with all the tax benefits, Trump's push on the interest rates, like when you combine, and then just the sheer demand of the housing buildup here in the United States, there's a compelling reason to be an investor.
You kind of touch on the tax. You guys are in the 40-50% tax bracket generally. And, people don't realize here how efficient our tax system is, or more efficient, I should say. A lot of people bitch about it, but there's massive tax advantages we get from the real estate itself that you don't get. So essentially, most of you guys work till the end of June for the government.
Yeah, I mean, so one of the things I really appreciate about doing business down here is you guys reward risk-taking and entrepreneurship. One of the biggest issues that a lot of Canadians have is that when they build a business or some kind of they become a success beyond a certain level, the way our corporate tax structure is first of all, you could be a successful entrepreneur as an employee, but your highest tax bracket hits, depending on the province, I think it's $150,000, $200,000. So for context, in the IRS's world, on the U.S. side, the highest tax margin doesn't kick in until about $500,000 or more, if I remember correctly. So even if you did get to the same percentage, the dollar amounts, you hit that ceiling literally twice as fast in Canada. So that's one. As an entrepreneur, as a business owner, there are very few limitations, few things you can do to save money within a corporation. By the way, there's no LLCs in Canada either. So we have the corporation or limited partnership, and there's no S corps or C corps, so you're fairly boxed in, and that, again, that becomes a problem for people because within that boxed in structure, there's very few things we can do to reduce our taxes, which again is what drives so many people down here.
So can you reduce your taxes? So say there's a foreign investor from Canada. Are you able to reduce your taxes through our system?
So what Ken and I did years ago, and what we're big proponents of, is you make the most of what you have. And that's why Ken was talking about in Canada, there's an RRSP structure, which is the registered funds, which is like a 401k. So within that structure, Canadians are able to get access to U.S. assets, but they still have the taxable issues on the Canadian side, but at least it lets them to play the game as best as possible and still get into great assets.
Yeah, so you can take Canadian RSP, which is retirement savings plan, and you can invest in U.S. real estate, but it has to be invested into a U.S. entity, and then that U.S. entity then gets all the tax benefits from the partnership, essentially.
Yeah. And there's a few carve outs and steps and whatnot, but yeah, it's the most efficient way. And I almost want to say that Ken was part of pioneering that as a US investor, because, I don't think there were too many people doing it at the time.
So is there a lot of multifamily development going on in Canada?
So there is, but it's different. I mean, down here, 1-story, 2-story, 3-story, bricks and sticks and whatnot. The way you guys build multifamily down here is not the way multifamily is in Canada. And that's a big part of it. Also in Canada, it's a lot more of an institutional style investor client base, where you have these multi-billion-dollar conglomerates, pension plans, insurance companies, and they build and provide most of the investment and capital for the industry. And then you don't really have MC companies type businesses in Canada. And then it skips all the way down to the mom and pops that might buy a duplex or a fourplex or a few condos. So that gap in the middle where you can truly build a 10,000 unit portfolio, over 20, 30 years, it's not really set up that way.
Now, why is that? Is that because there are no tax benefits for that middle ground, or?
Well, I mean, first of all, there's two reasons. One, a lot of people struggle with the ability to raise capital. That's a really big problem that people have. And then when you throw that into the backdrop of the tax structure, it really does create a lot of complexity for people.
So it's the benefits aren't necessarily worth the...
You have to be able to operate at a certain size right out of the gate. And what ends up happening is a lot of people in Canada end up becoming really high paid employees for other entities that are already operating in that space.
Canada's drop dead gorgeous. Right? Let's just say it has the most amazing natural resources, and it's a relatively massive in size but small population. So, and then even in the provinces, there's only a few major cities in each one, maybe even one, or two. And so where do you see it headed? Now that you've got the majority, it's kind of a socialist-based country where a lot of people are living off the government, right? Do you ever see it swinging back?
I think, so for context, about 90% of Canadians, if I remember correctly, live within 2 hours of the border. So all the way across the country, literally almost 90% of our population is along the border. So that's a really big percentage of people being close to the United States, for starters. Now, as far as the way people in Canada perceive things, I mean, look, a lot of people are very comfortable, and that's, for a certain type of person, that's fantastic. But the challenge is that promise is being harder and harder to fulfill on. Our healthcare system is stretched. The financial sector is stretched. There's a lot of people that are starting to get into pain. So, and I think with this tariff thing that's happening now, it is starting to push back more to a centrist economy where people are realizing like literally they're looking at each other and going, okay, well, maybe we should do business together. Like, yeah, you should actually have interprovincial, interstate trade. Right. So
right. Well,
yeah, that's
good. That's a good result.
Yeah. I mean, again, I look for the silver lining in everything. And I mean, at the same time, I don't know if this is Trump's intention, but I think it was about 36 of the 50 states that exist. Their number one trading partner is also Canada.
Yeah, I knew that. Yeah, it's very, very, mostly Midwest.
Well, and that's kind of part of what he wants, right? He wants everything to come back in house, but we don't necessarily have the...
Well, you don't have the nickel, you don't have the cobalt, you don't have the potash, you don't have uranium. We talked about natural gas and oil and all this stuff. There's all of these things are resolvable, but you're not talking about, within 6 months. You're talking about massive supply chains. A car that's produced between Detroit and Windsor crosses the border 6 times before it's fully assembled. right? So 6 times, that's a lot, right? So, I remember when I was in school, because I grew up out that part of the world, I used to work summers at a seat manufacturing facility, and we put chair. So this car would go back and forth a whole bunch of times. And when the product's finally finished, so how are you going to tariff that, right? So if you're going to stop doing that cross border, then you have to set up all these facilities where, and maybe that's the goal, but is all of this going to happen while Trump's president?
Well, and is the next person going to have the same policies,
Right.
or is that going to change too? Because like you said, the policy is more important than the person. Really.
I think every country is probably, and this is a worldwide trend, whatever happens in the United States happens in Europe. It affects policy everywhere. And I think it's a good idea for every country to look internally and pay attention to, put America first, put Canada first, put Portugal first. Like every country should have that perspective that the United States has. And I think if we all did that as a world economy, we'd actually become a little bit more well positioned. I look at the capital markets. That's my daily. We were talking earlier. Ross looks at lumber prices every day. Everybody has their perspective on the world. I look at capital flows, where money's flowing, and ultimately investors are looking to put their money where it's treated best. And the United States has done a fantastic job of positioning it from a tax perspective, from a stability perspective. And that's where the money's flowing. If you peel the Band-Aid off and immediately Trump follows through on all the comments he's made about, production and bringing everything back on, it's going to be a sober moment, because ultimately you've got tens of thousands of jobs related to various industries that Trump's trying to back onshore. And what'll end up happening is that will create some pain. And unfortunately, again, I'm not an economist, but as a business person, just paying attention to this stuff, are we going to fold back into the habit of potentially printing more money and doing social assistance? Probably. And if that happens, people need it because people have bills, they have, food to pay for and kids to take care of. Then, that creates printing. And if that creates printing, then, there's going to be a tough time. But I actually think that those tough times, if they happen, will again force Canada to look at completing other pipelines so we can pipe our product out to other countries, so we can relook at manufacturing, relook at technology. And that'll probably bring up a different conversation, because if Canada starts courting other customers, how is Trump going to feel about that in terms of national security? Because if we're now forced to sell products to Europe or to Japan or China or other parts of the world, that's going to bring up a different conversation. So
is there any other reasons people like to invest in the United States other than those that you've touched on already?
Well, so from a Canadian standpoint, I look at the United States and I look at housing reports, and the cost of housing in the United States is some of the most affordable, if not the most affordable, in the G8. So literally out of all the countries in the G8, in terms of median income to what it costs to own a house, buy a house, build a house, those numbers are as compressed as anywhere else in the world. Australia is expensive, Britain's expensive, Canada's expensive. So just from an affordability standpoint, it's a big check mark. Stability, the fact that it's denominated in US dollars is huge. The fact that you can have entrepreneurs that are not institutional investors like yourselves, like you're real people investing for yourself with your own capital alongside your investors. In Canada, it's a lot of employees of corporations and institutions not really investing their own money. So that's a big difference. And then, of course, just the sheer ability to make investments. In Canada, if you showed up with $1 billion, it would take you a long time to buy enough inventory to spend $1 billion. You show up here with $1 billion, you say, hey, Ken, we've got $1 billion. Ken can figure that out sooner than, a lot of guys in Canada, because there's just not enough to buy. Again, policy over people. And I think Canada and US are, again, for context, it's the largest undefended border in the entire world. The longest undefended border. And I don't mean undefended like as in, there's no border security. I mean like there's never been issues, in modern history where Canada and US, there was that one time where Canada had an issue and came down and burned the White House, right? But minor issue, right? But aside from that, it's the longest undefended peaceful border in the world. So, we have a lot to offer each other. So